Hey everybody, it's Victor Medina. Listen, you have to have been hiding underneath a rock not to notice all of the market volatility that has happened over the last few days. And so I wanted to be able to record this video and get in front of you with these points because I wanted to first let you know, of course, that we're aware of it, we're watching it, we are monitoring what's going on. And I also wanted to be able to provide for you some context about what this stuff means. And so to kind of set up why things have been so volatile, you'll have to remember that news has been coming out that has changed investor sentiment about what would be going on the market in the short term. And so that has changed a lot of the movement. In specific, we had the president sort of acknowledging that there might be a recession coming on. And on the heels of that, the market took a nosedive. Now, we have to stop and examine, did anything fundamentally change about the companies who have been issuing these stocks along the way? Anything changed about what they were selling, how much money they were making, what they were proposing to do in the future? And the answer is no. What had changed was the feeling and the expectation about what might be coming in the future. Even the statement that a recession might be unavoidable does not actually make it so. And so what happened was that because investor sentiment changed based on what was said, people started reacting to it. And that's where we have to pause for a little bit, because we don't have to follow behavior that's going on simply because of the feelings that we're having at any point in time. Just because something is being said doesn't mean that there's something that means anything about that. And so when we hear something like this and when we see the activity around that, the first reaction from people is typically, is there anything that I need to do based on this information? In here, we have to appreciate that sometimes acting and making choices and moving something can feel like it's more powerful, like it's a better thing to do than doing nothing. Some people feel like by acting, they're actually taking control. And that's where I get to step in as a little bit of a speed bump, because we don't respond to the news that's out there because we've never been tactical about our investing. We don't try to outguess or outpace the momentum or movement of what's going on there. In fact, we are evidence-based in the investment philosophy that we follow. So, for most people, when they ask, is there anything that I should be doing based on what's been going on in the market, the answer is no. There's nothing you should be doing. In fact, what we come back to is the design of the plan that we put in place. What drives a change to the plan is not what's going on in any particular day in the market, because that was something that was already built into the plan. What changes, or what causes something to change, is, has anything changed about you or your goals? If your goals have changed, then we should re-examine the plan, but not because something has been going on in the market. And that's the brilliance of putting a plan in place, and knowing that you have a plan in place is to make sure, of course, that just because something has changed out in the market or some of the conditions that are in there doesn't mean that you have to change anything about your plan if the goals remain the same, if the plan was sound. Now, many of you have assets with us that are not in the market because we've either recommended, or you've sought out, or you're interested and you agreed to put some form of an annuity in place. And the nice thing about people who have that as part of their overall portfolio is that is not subject to the market whatsoever. In fact, the market could continue a long decline over the course of a year and nothing will happen to your money that's allocated over into those annuities. That's a nice hedge against what's going around in the market, and it's why we blend those kinds of investment strategies together. So, the short summary of this kind of rambling email is, we know what's going on, and like you, we are understanding about why it might cause some uncertainty, but our feeling is that there's nothing that needs to change about your plan. What we saw there was a very typical response of the investors' sentiment and feelings and concerns based on news, but nothing that's changed about the math or the underlying fundamentals. And so for that reason, we're taking this in stride, and we're encouraging you to take it in stride as well. If there's anything that you want to talk to us more about, that's what we're here for. So you can either respond to the email, drop a comment on the video here, give us a call, and just know that we're here for you, not just today when the news suggests that we might reach out, but anytime that you need something from us, that's what we're here for. All right, have a great one. Talk to you later. Bye-bye.